Good afternoon all. Welcome to this webinar, Off-Payroll Working in the Private Sector, Preparing for April 2021. We'll give it a minute to allow everyone to connect. And in the meantime, you'll see coming up on your screen a poll question, which we'd like you to answer, please. This will give us an opportunity to gauge the level of current understanding, and we'll check again at the end to see how effective this session's been. So how confident are you that you're prepared and have a plan for April 2021? Not at all, reasonably, or very confident. If you've got any questions as we go through the session, please send them via the Q&A button at the bottom, and we'll answer as many of those as possible as we can at the end. We'll just give it another minute and then we're ready to go. Okay, I can see that nearly all of you have done that. Thank you for that. We'll come back to that towards the end, and we're now ready to go. So, welcome to today's webinar, brought to you by VWV, a full-service leading UK law firm with 5 offices which actually started in the early 19th century, and the Giant Group, a leading contingent workforce management services company for the last 30 years, based in London and Manchester and working nationally. Our subject is off-payroll working in the private sector, preparing for April 2021. The purpose of the event is to firstly make you aware of the changed responsibilities for all parties under the revised rules, then to describe the potential implications in terms of risk and cost, and finally outline the options to address those requirements. Our keynote speaker today from VWV is Michael Delaney. Michael heads up the firm's recruitment sector, as well as being a member of the pharmaceutical and healthcare teams practicing employment law. His work involves advising primarily employers, including employment businesses, on a broad range of employment and regulatory matters, often litigious and before the Employment Tribunal and High Court. From Giant, we have Dan Haslam, who is Group Sales Director, and his role includes helping clients to manage their contingent workforce compliantly and cost effectively using the whole range of Giant services and products. I'm David Hopkins, a workforce management consultant with Giant, and I'll be the chairperson for the session. The format today will be for Michael and Dan to answer a number of set questions which I'll put to them in order to give us a full view from a legal and practical perspective. These will cover the risks from a tax and employment law and compliance perspective, a view of observed behaviours and the practical options available to you. There'll be an opportunity for me to put your questions at the end, so please submit them via the Q&A button as we go through the formal session. And just to let you know, we are broadcasting remotely today, so apologies in advance for any sound or technical issues. I think we look good at the minute, so let's hope that continues. Right, let us begin. Michael, will you please remind us, what is IR35 and why is it so called?
IR35 is actually a reference to an Inland Revenue press release that was issued some 20 years ago when Gordon Brown was Chancellor of the Exchequer, and it promoted at that time a discussion in relation to contractors' pay, the government essentially being of the view that the way in which contractors receive their pay is disadvantageous to the Exchequer. And what's happened over the last 20 years is that there have been a number of discussions about how contractors' pay is to be taxed going forward. The Chancellor in October 2018 announced in the budget, so 2 years ago, that IR35 or off-payroll regulations, as it's commonly called, will be introduced into the private sector. IR35 essentially involves the relationship where a contractor is providing services through their limited company to an end user. It doesn't apply to agency workers, those working through an umbrella company, or those that are genuinely self-employed.
Okay, sorry. The changes to the legislation are due to come into effect from April 2021, but having been deferred from earlier this year, big question I think a lot of people have is, do we think it will definitely go ahead this time?
I mean, we're living obviously in very uncertain times, and these changes to off-payroll working regulations were due to come into force on the 6th of April this year, but because of the coronavirus pandemic and as part of the government's support to businesses, to employees, and also the self-employed, it has been deferred until the next tax year starting April 2021. The changes that are about to be introduced in the next tax year form part of the Finance Act 2020, which received the royal assent on the 22nd of July 1990. So the legal framework is now there so as to implement these regulations on the 6th of April. I think historically as well is that the government believe that there has been a significant cost to the Exchequer, and bearing in mind the need for government to raise taxes, it is likely, I think, that the legislation will be implemented with effect from the 6th of April. But again, we are in uncertain times, and there's always the possibility that it could be deferred again, particularly if the self-employed lobby effectively government. But I think we need to be prepared as if the legislation will be implemented on the 6th of April.
Michael, I was just going to add into that, if I may, as well. We were chatting about it, weren't we, before we came online. Good afternoon, everyone. I think I read something yesterday from Rishi Sunak, the Chancellor, that was mentioned in Parliament around they've been trying to quantify the cost of the delay in IR35, and he hung the number on it around £750 million. Not entirely sure how the maths have worked on that, but all in all, they're clearly looking at this and costing it out. Certainly because it was right to the death when they delayed it last time round. I think we would all would say anything could happen, couldn't it? But given that it's now in statute, given that the Chancellor's obviously looking at that cost and clearly needs to recover a lot of tax, you'd have to feel more certain that it was going to happen from April. But that said, in any event, we don't know. You have to prepare like we did last time round. But I think the other interesting thing as well in terms of the lobbying is what I've been picking up from some of the trade associations and trade bodies is that I think a lot of the market are now asking them to start desisting from lobbying because frankly everyone's keen to get this thing done. It's very time consuming for all businesses concerned, not just the recruitment space but also the hirers as well. So I think there's a general view that the work's been done here and everyone would like to see things move forward. Clearly the contractors will feel different about it for understandable reasons, but I think that's the sort of landscape that we're looking at now.
Yeah, I'd agree with that, Dan. I mean, I think it was about a year ago or so, they were talking about those level of figures. And again, that figure that you just mentioned, I think was likely to rise into over £1 billion. Again, probably in a year or so's time, if there is no change that is actually implemented.
So if it's as certain as it can be, then from a legal perspective, Michael, what do the changes mean for end users, end hirers, agencies, contractors, and other parties in the labour supply chain?
So, I mean, currently speaking, where a contractor is providing their services through their own personal service company, they have the responsibility of determining whether the supply of services to the client falls within or outside the off-payroll regulations, and they are then also responsible for accounting to HMRC for the appropriate taxes. What's going to happen with effect from 6th of April is that the assignment, the status of the assignment is going to be determined by the client, the hirer, the end user. We're going to have to be making status determination statements. And also as well, the responsibility for paying the tax is going to fall upon the fee payer. Now, in a straightforward relationship where you have an individual contractor and their service company contracting with the client end user, then the client end user will have to determine whether the relationship is inside or outside IR35, and if inside, will have to make the appropriate deductions for tax. The relationship gets further complicated, I think, if there is a recruitment agency or an employment business involved. So if that contractor service company is introduced to the end client and they then become responsible for paying the contractor, then it's going to be the recruitment agency or the employment business as the fee payer that's going to have to be responsible for making the tax deductions. But the other complicated factor is that the recruitment agency will be bound by whatever status is determined by the end user. So recruitment agencies do need to be careful if they are supplying contractors on this basis, particularly in the next tax year, because if there's a mistake somewhere down the line, they could end up having to pay the unpaid taxes, interest, penalties, etc.
Dan, from your point of view? Yeah,
I think key points that Michael touched on towards the end is that when you take a step back from IR35, obviously it's an important piece of legislation, but what it ultimately starts boiling down to is good supply chain compliance. Yes, there's the determination piece, but potentially there's much bigger risks to hirers and recruitment businesses, in making sure that they've got the right sorts of partners and payroll businesses involved in sort of dealing with tax. So we saw plenty of examples back in, I say plenty, a few examples back in 2017 where there was a number of companies that formed to sort of act as the fee payer on behalf of various people and didn't necessarily deduct the right levels of tax, actually ignored the determinations, continued to pay workers gross and then disappeared. So I think that was one of the real downsides, I think, to the legislation changes in the public sector, is you sort of give a boon really to the non-compliant activity in the market. And there's been a lot more, again, in private sector, we've seen a lot more non-compliant activity going on as contractors are hunting for best take-home pay. So, a continuous point for me will be to make sure people are reminded to ensure good supply chain compliance checks, make sure the business is there financially secure and stable, because if you make a mistake with that, it can present potentially bigger risks than necessarily getting the IR35 piece wrong.
Yeah, good. Okay, so before we look in a bit more detail then at what we can do about this, Michael, are there any exceptions to IR35?
Yes, there are. Under the new regulations coming in next year, where the client or the hirer is deemed to be a small business. So in other words, a company where the turnover is less than 10.1 million, where the value of the assets on the balance sheet are 5.2 million, or where the staff are 50 or more, then 50 or less, then those organizations will be deemed to be a small company and will not have to comply with the IR35 status determination.
Right. Okay. Thank you. So, as you say, end hirers become responsible for assessing the employment status of contractors. How do end hirers go about making that assessment?
Right, I mean, the starting point is there is the HMRC CEST, the Check Employment Status for tool, which is a tool that was designed a couple of years ago. And what the parties can do, and anonymously if they want to, they can feed in the information into the online tool and get a result from HMRC. Now, provided all of the relevant information is put into the tool, the revenue have indicated that they will be bound by that assessment. However, if there is any misrepresentation or omission, the revenue have also made it clear that they won't be bound by any such determination. But looking at it from the hire or the end client's point of view, they have to work out whether or not the individual contractor through this assignment, is that person really a self-employed or an employed person? And there are a number of factors that the courts, the tribunals, the HMRC have taken into account over the years to determine whether or not somebody is employed or self-employed. I mean, for example, where the contractor is under an obligation to turn up for work every day, then again, you might have what's called mutuality of obligation between the parties. Where the contractor is under the supervision, direction, or control of anyone in the supply chain as to the manner in which the services are provided, again, that is a relevant factor. Such other factors, such as where is the work done, what does the worker do, how it's done, whether there are any financial risks, those are other factors. Also, is the contractor held out as an integral part of the organisation? Certainly, I've seen over the years, particularly those working for banks and financial services, maybe they're undertaking computer programming. They sit at the same desk every day, they turn up for work every day, they're held out by those institutions as part of the organisation, so they have an email address and a phone number that promotes themselves as part of the organisation. Again, that's another factor that HMRC will be looking into. The other point as well is their right of substitution, which is always a relevant factor. But in many situations as well, I think, as we know, the clients or the hirers are very reluctant to accept substitutes, particularly where the contractor is providing what could be described as a critical service. Other factors might include what is the reality of the relationship, who's holding any adequate public liability insurance, those sort of factors. And there are a number of cases that have evolved, certainly over the last 10 years or so, where these factors are taken into account by HMRC, by the Employment Tribunal, to determine whether or not someone is employed or self-employed. But by and large, it is a question of fact in each case.
I was just going to add into that, Dave. I think Michael's obviously put forward all the sort of complexity around IR35. It's not clear cut. There's not one determining factor. There's a whole host of different factors, and that's why it's been such a grey area for many people. When looking at what we see, in terms of clients, in terms of how they're trying to figure through making assessments or not, if they do indeed decide that they want to go down that assessment road, most of them will look at CEST, and it will play a part in it. Why wouldn't you? If HMRC have said they'll stand by the decision, then it would seem reasonable that would form part of the process. That said, as Michael said, it doesn't matter which tool or which approach you take, or however you arrive at your decision. The decision is only as good as the facts that you're putting into it. I think there was well publicised challenges with NHS Digital, who had gone through a process which was CEST based, and they felt very confident on the outside determinations that they had. However, HMRC came along and really challenged whether this was the reality of the working practices here, or and basically slapped rather a large bill their way in what they viewed was the incorrect determination, and therefore tax was due. So you've got that as a case in point for people to bear in mind. CEST has its limitations. It's well criticised for its lack of consideration to mutuality of obligation, which HMRC take a pretty one-dimensional view on that. Basically, if a contract's agreed, in their view, there's mutuality of obligation between the two parties, and we're done. I think the courts clearly take a different view, and Michael will know plenty more about that, and that's why HMRC do trip themselves up a little bit. And when you look at the other commercial tools that are available in the market from other providers, they will bring in mutuality of obligation and have a whole range of questions to ask. As to whether that's a better or worse approach is obviously up for debate. I think the other factor that clients tend to look at when they're making decisions on how they're going to assess is also based on volumes. You know, if you're a client and you've got 20 workers to assess, and that boils down to 2 or 3 job roles, then the reality is that's a work to do, but it's not a huge undertaking. Assessed will work well in that sort of arrangement. But if you're looking at trying to assess thousands of contractors, Assessed, it's manual in its approach. It's not built as a tool that you can feed in tons of data, whereas some of those more commercial online assessments will go through that and will give a quick response. So I think if hirers are making a decision to go down that road, they should consider a few factors. Yes, the basis of the decision, but also size of population and whether or not software might be able to help them sort of get over the hurdle in the project.
I mean, sorry, one final point on that as well, is that you can have very elaborately well-drawn contracts put in place, but the revenue have made it clear, as have the tribunals and the courts, that they will look behind any elaborately drawn contract if they have concerns about the relationship and look at what's actually happening on the ground.
Yeah. And some of these proprietary offerings now are offering insurance attached to them. Do you have a view on that, Dan, and the security of that?
Yeah, you're right, Dave. There's a couple of the well-known assessments out there that have now got insurances. So the line of thought is if you've used the assessment tool from that business and you get an outside decision, then there's the ability to be able to purchase insurance that protects the fee payer from risk, and also the hirer as well, actually. The insurance companies that are backing these insurance products are well-known, reputable businesses, so you would look at it at face value and think, okay, that's clearly got to play in the process. And I think I can well understand why agencies and hirers would take some comfort in having those insurance policies in place. If they're going to be looking at processing people as outside IR35, why wouldn't you have it if it's going to give a layer of protection? But we'll find out over time as to whether or not, you know, HMRC will try and be aggressive against these insurance policies and try and challenge them. You'd expect that they would. But if the basis of the assessment is sound, and you've got all the facts in there and you've got a decision, then it should be watertight anyway, without necessarily the need for insurance. So I heard a good analogy on this a couple of weeks ago, actually, where someone said, we buy car insurance not to drive a car at 1,000 miles an hour, but to ensure that if the worst happens, it's there. And I think that's a good analogy to use here with IR35 insurance. Make sure you're taking reasonable care in your approach and being diligent, and the insurance is there is a net to catch, rather than you to go aggressive to start pushing down outside decisions. I don't know if you've got any views on the insurance piece, Michael.
Again, I suppose it's like with all insurance products as well. It relies upon the policyholder making, obviously, a true and frank disclosure at the time the policy is actually taken out. And if there is any misrepresentation or omission on the part of the applicant who's taken out the policy, then there's always generally within the terms of the policy an enablement on the part of the insurance company to actually void the policy. So it is, I would have thought, you know, very important that if you are actually applying for such insurance, that you are, you know, very upfront and you provide full disclosure as to the nature of the business and that you are actually running.
Okay. Now, one of the terms that we hear in relation to making status determination statements is reasonable care. What does that mean, and what are the implications of that?
Yeah, I mean, reasonable care. I mean, in the recent employment status manual, the ESM 11,000, I think it is, HMRC have essentially commented that it recommends that the the client will use their own due diligence to determine whether or not the assignment falls inside or outside IR35. And to be honest and frank as to whether or not the situation is contrived, and they've got to look at the reality of the situation. I think HMRC are looking for a high level of compliance. I think where status determination statements are made on a blanket basis, I think they run the risk of essentially being void. I think HMRC requires the client to look at the individual circumstances of each assignment on a case-by-case basis. And also when that statement or assessment is made, that it is made by a person that has a proper and full knowledge of the terms of the assignment. The problems I think that are going to arise is where there is a dispute, possibly between the contractor and the client about the outcome of that status determination. Particularly, I'm finding or seeing that a lot of contractors are quite resistant to change. They don't really want their income impacted as a result of these changes. And you're going to have a situation where there might be conflict as to the outcome of the status determination. But again, built within the regulations, there is a right of appeal, and the client is obliged to deal with the contractor's concerns within a sort of 45-day period. Again, considering carefully any grounds of appeal and applying the same test as well, namely that they will cover or they will make they will assess any appeal, again using reasonable care. So again, it's a question of fact in each case. The clients and the hirers should know what's involved in the delivery of the services and whether in reality it's an employment or a self-employment situation. But what it shouldn't do, and again, this is a situation I have come across, where a client makes a determination that the relationship is outside IR35 when clearly there's a risk that it will fall inside IR35, and where that contractor is supplied through an agency, ask the agency for an indemnity in relation to any taxes. That's something that I'm seeing as well.
Yeah, I was going to add to that. So I think that last one that you mentioned, Michael, is a real quandary for a recruitment business, potentially getting put into a bit of a cul-de-sac there if the hirer is going to be quite aggressive on making outside decisions, but you'd hope that they're going to do proper assessments and then therefore we're back to reasonable care again. I think, you know, certainly when we're in the contract chain and we're looking at IR35 determinations as to whether or not, you know, we'll pay in or gross, we absolutely take an interest in the people that are making the determinations. It's got to be, you know, someone who understands the implications of this. You know, you're looking at for HR directors or someone of that ilk at a senior level that would sign these things off. I think we've seen a number of examples where if it's left to hiring managers, unfortunately, it can be a bit of a conflict of interest going on there. The hiring manager's keen to get people in the business. They want to be an attractive employer. Contractors are pushing to make sure, you know, they want to go for roles that are deemed outside. So you could see there may be a vested interest in the hiring manager wanting to skew that determination towards an outside position. So I think who's completing that is really important. I think as well, just going back on assessments with some of the commercial tools available, one of the interesting parts with those is the sort of collaborative assessment approach. So actually the client, the hiring manager, and also the contractor are involved in answering some of those questions. So you're getting input from all the parties involved, which is not the same with CEST. And you know, maybe there's an argument there to say that's a more robust assessment approach if you're talking to all parties. And if all parties are agreed on the facts and the inputs, then that should be a nice, transparent way of people entering into an arrangement. And the other thing on reasonable care is The bar is probably different for different sizes of businesses. I think HMRC's come out and said, you know, their expectations for reasonable care and the detail that businesses take on assessments would the bar is probably higher for larger businesses that have got the resource. That's one of the reasons why they've put, I think, an exemption in for small companies, because, you know, small companies, this is not their day job. But with a large corporate with an established legal and HR function, you'd expect that bar to be quite high. And in any event, anyone who is making determinations, I think the record keeping piece is absolutely essential, making sure there's records kept of the thought process, the approach that was taken, and the assessments itself. And so if HMRC do come along and want to challenge, then you should be able to present a nice story that says, these are the considerations we took. This is how we approached the assessments. This is how we delivered them. And that should demonstrate, you know, reasonable care, you would hope.
I think, sort of following on from that as well, I think it was highly publicised about a year ago, where I think it was HMRC wrote to GSK about 1,500 or so contractors that they were engaging at the time, and essentially it was a shot across their bow that if they got the assessments wrong, then obviously you know, HMRC wouldn't be slow in pursuing them, I guess, for the tax. So they were certainly firing a shot across their bow. No doubt they've done that with other organisations as well.
So the new arrangement says, obviously, that the end hirer does the assessments and that gets passed down the supply chain. But what are and where are the potential tax consequences throughout that supply chain then?
I suppose, again, following on from what I was saying earlier, that it's the fee payer that's going to be responsible for the payment of the taxes. So if there's no recruitment agency involved, then obviously that assessment will fall to the hirer. But where there is a recruitment agency involved, if the determination is that the relationship is inside IR35, the recruitment agency will essentially have to deduct the taxes. Now, one of the situations that is highly relevant in this situation is the issue of employers' national insurance contributions. So, I mean, I did an example for a study group there recently. So take a typical situation where currently a contractor through their personal service company renders an invoice for services to the client for, say, 6,000 plus £1,200 VAT. So in other words, the contractor or the personal service company is looking for a sum of £7,200. If under the new arrangement, the assessment is that the assignment is within IR35, then either the agency or the client, depending on whether an agency is involved or not, they're going to have to make deductions for the VAT, the employee's national insurance, the estimated basic rate tax. And on that example alone, where a contractor currently would expect to receive 7,200, under the new regime, the contractor gets 4,350. Now, there's the added problem as well on that example of about £729 worth of employer national insurance contributions. Who's going to pick that up? And the reality of the situation is it's not going to be the agency, and the hirer is not going to want to pay it. So that further comes off the contractor's money, and they're left with a sum of 3,621. So about half of what they are used to getting. That's potentially how these new rules will work.
Yeah, I think good. I mean, when you go into the numbers, Michael, it's clear to see why it's such a contentious issue, because it's, you know, we're talking about significant drops in net take-home pay. Although clearly there's be an argument the other way to say, well, if the person's deemed inside, is that not tax? They should have always been paying from the start. Yeah. But we certainly we'll avoid that debate today. I think in terms of the figures and the costings, me looking at what our clients do and what I've seen in the market. Before you start assessing IR35, actually what most clients I would advise need to think about is how business critical are these contractors. So if you can, I talk about a bucket list. So you look at forming group your contractors together based on that business critical element. So if you've got guys that are on projects where if they leave, that's an absolute business failure event, then clearly you need to take an approach there that's going to keep those guys happy. And if you're going to go, and it may be you don't even want to do assessments, you're just simply going to increase the rate substantially enough so the contractors don't move. We don't see it often. I probably see less than 5-6% of contractor books where that approach would be taken, but that is one of the ways to sort of de-risk the position and just accept that this is the costs associated. You then got sort of bucket 2, which is perhaps contractors where they're important, someone doesn't want to lose them, but that said, the recruitment partners or their internal recruitment suggest that they could replace them. So what they may do is look at a happy medium of picking up maybe the employer's NI that you're pointing out. There's also apprenticeship levy to factor in that as well if the business qualifies for it. Yeah. So you would, so maybe there's a halfway house there of increasing the rate of pay to cover those employers' costs, but not as dramatic as the first instance, which is employers' costs plus PAY and employees NI, which is a substantial bill. And then you've got the final bucket, which is, either wise, are these guys still working for us, or actually we can afford to reduce our contractor numbers, and they'll do so. So again, looking at this year, I think not everywhere, there are certainly many growth areas, but certainly clients that I'm revisiting now that we were talking to in Q1 of this year, the contractor numbers are lower than what they were before. Because at the time, because of COVID and the impact on the economy, they've looked at reducing the contractor numbers. So that's one part to play. But that is the thorny issue. If you're going to make the decision to do assessments and find people inside, then actually, what's the cost implications, and can you afford to lose those contractors, or do you need to do something? And we see, most of the time, I see clients either dropping into box 3, which is we're not increasing rates full stop. The contractor will, have to like it or lump it, which you saw a lot of the banks doing. And then over time, maybe a bit more flexibility comes in where they start to understand actually there's a supply and demand thing coming here. So actually we should try and meet them halfway. So I think if you've got a clear idea on how business critical these people are, that will be able to inform your financial decisions that you need to make off the back of this.
Yeah, I think it's like everything would be led, it's client demand, isn't it? And people who are business critical are more than likely are going to be retained, and then it's a question of a commercial negotiation then as to whether rates are increased to pick up any shortfalls in taxes that have to be paid.
Yeah, I think from a legal perspective, as we know, not much has changed this time round from last time round. The legislation looks, exactly the same. There's a bit of noise in the market about definitions on fee payer and making sure that umbrellas don't get caught, but I think we're all convinced that that will work its way through. But definitely where there is a change is the COVID element. So I think when you think back to March when the postponement came along, you could almost hear the glee from the contractors, the fact that this had been delayed. But then very quickly, in the space of a couple of weeks, when the impact of COVID became clear, contractors are far more concerned with wanting to make sure they could retain on assignment and continue working. Yes. And whilst things are starting to improve, it's still very up and down in the economy. So that whole sort of supply and demand piece might have been, more in the contractor's favour before, but perhaps that pendulum swung a little bit more towards the client. I'm sure, contractors will take their own view on it, but they need to be considering, how business critical am I if I want to have this rate conversation, and equally hirers should be thinking about the same thing. So that's an interesting dynamic to add in, keeping your eye on the COVID situation.
Yeah.
One thing that does seem certain is that the vast majority of contractors are going to be found to be inside IR35, and estimates between 70 and 90%, depending on who you speak to, but certainly a large majority. So that being the case, then, if we look to the implementation issues that gives us, what are the various payroll options available for contractors who are going to be deemed inside IR35, Dan?
Well, there's a few. So I suppose the first obvious one is that a hirer may consider if they're engaging them directly, the hirer may well consider taking them on as permanent employees. if logic would follow, if they're deemed to be inside IR35, then take them on as an employee. Probably wouldn't surprise anyone to know that I don't see much of that happening. Most businesses are absolutely keen not to take contractors on to their own books. They prefer, if they're going to offer PAYE as an option, to keep it separate. So there's a number of clients that we work with where we have we've created a PAYE offer in the sometimes called a PEO, Professional Employment Organisation, which to all intents and purposes is outsourced payroll, except Giant or whoever the PEO provider is engaging those workers, and that's a separate contractor PAYE offering where the onboarding and the offboarding can happen, and that's separate to the client's permanent staff. So PAYE is a logical option. You've also got clearly umbrella companies will play a part. So I think my rough guess would be circa 70% of contractors who are deemed to be inside IR35 are probably going to find their way through to engaging with umbrella companies. So an umbrella company will employ that person, give them all the employment rights, as well as taxing them as an employee and dealing with all the RTI and payoffs to HMRC. And that's a well-established solution in the market. Although I'm sure we'll probably talk about it later, you need to be careful about the umbrella companies that you choose and make sure they are compliant and all the rest of it. So I think umbrella will play a big part. I do think that PEO model that I mentioned at the beginning, though, over time, potentially will outstrip the umbrella model. And the reason for that is there's this tension at the moment in legislation between employment law and tax law, and the government have talked a lot about trying to sort of tidy that up. So you've got the Good Work Plan, the Taylor Review, talking about transparency and ensuring that workers are clear on the real rates that are being paid. And sometimes umbrellas can be criticised for it not being a transparent model in terms of the real rate of pay a worker's on. Whereas that PEO piece, or a straightforward PAYE offering, you tell the worker the PAYE rate that they're on, and that's the rate that they see on their wage slip. There is a total clear transparency on that. So I think over time you'll see that PEO model continuing to be talked about. Final payroll option would be continuing to payroll the contractor into their limited company. So just because they've been deemed inside for IR35, the fee payer could still pay them into the limited company. They just have to make sure they're deducting the right levels of taxes and paying that off to HMRC. So as Michael said earlier, that the first part of that is clearly the employer's tax costs. So that's employer's NI, apprenticeship levy if the hire or the fee payer has to pay that. If someone like Giant's involved in that sort of arrangement, then there'll be a margin as well. So if you've outsourced it, you've obviously got the outsourcer's margin to consider. And then on that, what's left, the rate that's left over, you're then needing to calculate PAYE and employees NI, pay that all off to HMRC as well. So there are many contractors who will opt for that option. We should bear in mind IR35 is on an assignment by assignment basis. So contractors may also have other income that's not or is outside of IR35 getting paid to the limited company, and they want all their income to go into the business. So that is also an option as well. I probably see, rough guess, probably 15% of the contractors that we engage with choose that route for a variety of options. But I think the vast majority of the go-to is going to be the umbrella market because it's simple and it's easy. You take whatever the rate was previously, pay that off to the umbrella company, and they will deal with everything sort of downstream. Just got to make sure you're picking the right ones.
Okay. Now, I think the end hirers now obviously have a vested interest in compliance throughout the supply chain and making sure that the right deductions are made at the right level by fee payers and so on throughout the supply chain. What advice would you give to hirers who are looking to engage payroll providers for help in this process to make sure that they've got that peace of mind and compliance?
Yeah, I think it's important. I mean, basic procurement rules apply. Any supplier that you're looking at having in your supply chain should do your due diligence. Unfortunately, the payroll industry is a non-regulated space. I think the government are taking more action to look at bringing in regulation, which Giant would welcome certainly, because it's much needed to sort of tidy up the market. But in the absence of regulation, then there are some trade associations that have come together to try and improve standards. So the FCSA is one. I'm a board member now of the FCSA, and there's a code of conduct which all the members have to abide by. I think we're up to about 60 odd payroll members now that are part of the FCSA. And that code of conduct has to be reviewed on an annual basis, audited by the likes of EY and Safries and lawyers as well, to make sure that the companies are following the code. There's a desktop review, making sure the right wage slip formats are being used, the calculations are correct, and that payments are being made off to HMRC. So I think as a starter for 10, that's a good place to start and have a look at that badge and whistle. But I do think you should do your own due diligence on paying attention to financial stability and longevity in the market. You know, Michael touched on before that there are potential ways that the IR35 debt risk can pass back up the supply chain if the fee payer doesn't do the right thing and deduct the right levels of tax. And he's quite right that there are clients asking for indemnities down to protect against those risks. Well, if the provider is going to provide an indemnity, that's one thing, but if the balance sheet is so weak as to it not to give any comfort anyway, then it's a moot point. So if you're going to ask for indemnities and look for those assurances, you want a payroll provider that's got a strong balance sheet in there as well. So I think definitely do your due diligence, definitely talk to anyone you know in the market to get recommendations, create a short RFP that you can put out. But also, I'd say to hirers, don't be afraid of mandating down the use of specific companies. So if you are comfortable with one or two payroll providers, and you feel free to mandate that down to your agency partners or to your contractor base, because if you leave that open for the contractors to go out and look for the ones that they wish to get paid through, a lot of them will go based on the, you know, what's the highest net pay that you can pay me, and that starts to open a wide open door to non-compliant models, which probably unfairly called umbrella models, because most of them that I see aren't necessarily umbrella at all. They're just disguised remuneration schemes, offshore loan schemes, these sorts of things. And if you start having those sorts of suppliers in your supply chain, then you're opening up a whole new can of worms and reputational damage. So do due diligence, get comfortable with the suppliers, and feel comfortable to mandate that down through the supply chain once you've made those decisions.
Michael, a legal comment on that?
Yeah, I mean, I don't think I've really got much more to add than that. I don't generally refer clients to payroll companies. I suppose that the point is this, that if you are the hirer, you really do have to focus on making sure that the status determination, you know, is correct, and that either the end user is making the appropriate deductions, or indeed that the liability is passed down the chain. So I haven't really got anything else to add to that.
Okay. Good. Okay. Well, thank you both for your responses so far. We've received a number of very good questions from the audience, which we'll come to shortly. Just before I do that, having done the formal session, can I please now ask you to respond to that poll question again, which will pop up miraculously there, and tell us what you now think.
This is where we get nervous, Michael.
Yeah, this is where we find out if anybody's been listening. Yeah, yeah. Okay, thank you for that. Now we'll come back to that after the questions. So see where that's going to leave us in a few minutes. Okay. Right. So referring back to assessments, then I think it was mentioned briefly, but it's a question around whether a contractor or PSC can appeal an end hirer's status determination, and how's that going to work?
Yeah, certainly within the new regulations, there is a right of appeal, and I think I mentioned earlier the client must deal with that appeal within 45 days. If the client doesn't deal with that appeal within 45 days, then the client will be deemed to be, or continue to be, the fee payer for the purposes of deducting taxes going forward.
Yeah, I was going to just add to that then. It's, I think one of the observations HMRC took from 2017 was really making sure that the contractors get communicated the decisions down, because the communication was awful back in 2017. Probably not unfairly to blame the public sector clients, because they didn't have much time at all, did they, Michael? I think the assess tool wasn't released until about 4 weeks or 3 weeks before it was all due to happen. So they were very keen this time around, I think, to improve the communication part and add this appeals process piece in. Although I have to say, I don't know if you've seen any examples, Michael, but I'm yet to see a hirer that would reverse their decision based on appeal that's been made. So I think I'm a bit of a cynic with this. I think it's a bit of window dressing to help the contractor feel like they've got a voice, but in practical terms, I don't think I've yet to see anyone reversing that decision.
And also, I think from the hirer's point of view, potentially if they are the fee payer as well, they are carrying the risk, and logic will dictate, unless there are good commercial reasons otherwise, they will maintain that the relationship is within IR35 and they have to deduct taxes, unless, as I was saying earlier, they can get an indemnity and pass that liability down the road. But again, that's fairly high risk strategy.
Yeah, I think that's why, again, that you'll see, when you're looking at a hirer that's probably already got a recruitment supply chain there for elements of their own contractors, but if they've got contractors who are being hired directly, then you'll often see them thinking now about, okay, can we move that over to the recruitment firm? Can we engage with an outsourced, a contingent workforce management business like Giant to put a bit of degree of separation in between there? And then that introduces the concept of indemnities to come through as well.
Yeah. I mean, I suppose one other possibility as well is that the hirer gets a personal indemnity as well from the individual contractor. That's another possibility. But of course, indemnities are only as good as the person giving them.
Okay, and the next one, what will happen if an end hirer does not do a status determination and continues to engage contractors and their PSCs using an employment business?
Again, my understanding on that score is that the hirer will be, for all intents and purposes, the fee payer. So if they don't do the status determination and it all unravels, they are going to be the ones that are going to be responsible for the unpaid taxes, interest, penalties.
Yeah.
Yeah, agreed. Nothing more to add there, Dave. I think that's they've got an obligation on them. But interesting, probably at that point, to mention one of the behaviours in the market, especially around this reasonable care piece being such a sort of grey area, is we did see a lot of clients, and we're seeing it now as well, who actually make decisions to say we're just not engaging contractors via PSEs anymore. And that's a neat way of sort of circumventing this whole piece on determinations and whether or not to take reasonable care. Because actually, if you say I'm only going to engage them via PAYE or via an umbrella or whatever it may be, then you don't have to worry about doing any more assessments. And there's a lot of that happening, or happened in March, and there's a lot of it happening again now. Because frankly, clients haven't got the bandwidth at the moment with everything that's going on to want to go down those assessments, and they're nervous about getting it wrong.
Yeah. Okay, and the next one, is there a timeline covering when this will apply to small employers? Should companies expect a retrospective tax bill if contractors are deemed to have been disguised employees?
The new regulations will only kick in from the 6th of April, was 2021. So in the HMRC are not interested, as far as clients and hirers are concerned, in any services that are provided before the 6th of April 2021. So anything before that date is still going to rest with the individual contractor and the PSC.
Yes, I think so. In terms of the small company piece, I'm not aware of any intention to bring small companies into scope. That said, there may well be, but there's nothing that's on my radar yet. But perhaps that's an area that we'll get to over time. But I don't think there's anything imminent around that. What's the other first part of the question, Dave?
I guess it's about retrospective tax bills. So if a contractor's been working and continues to work, but their status changes after the 6th of April, what's the likelihood of a retrospective knock on the door?
Yeah, so a big concern obviously for a lot of contractors. I think there's been a lot of HMRC messaging put out to say they aren't going to look retrospective. They're just going to think about the position moving forward from April the 6th onwards. Having said that, I've seen some interesting commentators on LinkedIn just this week actually suggesting that all very well and all very well said, but actually if you get into the detail of this, is it really as much of a guarantee as you'd hope it would be? And ultimately, HMRC are there to collect tax from people. If they have the ability to go backdated, then potentially they could. That said, I think it would be a bit of a cynical move if HMRC have been putting out to say we're only going to look at the position moving forward from April the 6th next year, to then start trying to catch out contractors. But it is a potential risk that people need to be aware of. I think they can go back. Is it up to 6 years, Michael? If yeah. So that's a lot. That's potentially quite a lot of money if someone's been operating outside for some time.
Now, we've mentioned a small company a few times as we've gone through. There's somebody asking specifically here about the 3 things that may deem a business to be small. Can we just maybe reconfirm what they are? And then the question is it any of these 3 that apply or all of them that apply?
So it's all the, sorry, let me just put my notes. So the small company is defined under Section 382 of the Companies Act. If the annual turnover is not more than 10.2 million, the balance sheet is less than 5.1 million, and the number of employees is not more than 50. So my understanding is that if any of those, if 2 or more of
those 3, I think,
yeah,
isn't it, Michael?
Yeah, 2 or more apply, then it's a small company.
There's been also as well, just to, so it's 2 out of 3. I think also there's a lot of noise around, well, how close an eye do we need to keep on this? Because clearly businesses will fluctuate between small and medium. Exactly. The HMRC have talked about you should consider your accounting period. So if you're going to move from, small to medium in the next accounting year, then you need to be, accordingly dealing with IR35. So there's stuff on HMRC's website around that if people want to sort of do a little bit more digging.
Okay, well, thank you, gentlemen. I think that's in the interest of time, that's all we've got time for today. There were still a few other questions which we can pick up separately with those who've asked outside. But many thanks to you both for your input today and for the attention of all you who've joined us. I'm sure you're all dying to know how we did with the poll and see how these how we mark these guys. And at the beginning, it was fairly simple. There was 95 of you who were reasonably confident, and that has now moved to 80% of you who are reasonably confident. But the good news is 12 of those have moved to very confident, where it was 0 before. So you've that's a very positive shift. The interesting one is that there were 5% who were not at all prepared. There are now 8% not at all prepared. So either you've spelled out the difficulties they didn't really understand before, or you've confused them. But for those 8% of you and the rest, obviously, we will be sending out contact details of both these guys who are obviously extremely knowledgeable and would be more than happy to pick up and try and fill in some of those gaps for you. We will be sending out an email to follow up today, which will include the recording and a quick questionnaire to let us know what you thought. As I said, we'll have the contact details of Michael and Dan in there, and feel free to pick up with them. So thank you again. Thank you from our speakers, and have a good day.
Thank you.
Thanks, everyone.